When taking out a loan, it's easy to focus solely on the advertised interest rate, but focusing only on that top line number leaves you blind to the unexpected costs lurking just beneath the surface. Banks advertise the stated interest rate because it looks appealingly low, but the stated rate rarely reflects the actual price you pay. For that, you need the annual percentage rate, or APR. APR exists to bring those hidden charges into the light. By rolling origination fees and closing costs into the rate, it calculates the true mathematical cost of borrowing your money over a year. Manually running this equation is tedious, which is where the MiniWebTool APR Calculator comes in. It's designed to cut through the banking jargon and handle the complex math for you in seconds. Understanding how to run your numbers through this tool gives you a concrete way to mathematically verify any loan offer and protect yourself from overpaying across the lifespan of your debt. Let's look at the calculator. The interface is clean and completely distraction-free, prioritizing the raw data you need over the confusing paperwork provided by the lender. To get an accurate reading, you need 4 distinct pieces of information from your loan estimate: your total loan amount, the stated interest rate, the length of the term, and any upfront fees. We'll start by establishing a baseline scenario. Imagine you're taking out a $25,000 auto loan, and the dealer offers you a 5% stated interest rate. Before hitting calculate, watch out for the most common mistake: misinterpreting the loan term format. You must verify whether your term is measured in months or years, and select the correct unit in the drop-down menu. Even if you input that baseline data perfectly, the resulting number won't tell you the whole story until you account for what the bank is charging you to process the loan. Here is the variable we need to watch: a $750 origination or processing fee that the lender requires you to pay upfront. You have to enter that number into the fees field. If you leave this blank, the calculator has no new data to process, and the APR will falsely mirror the 5% stated rate. The calculator takes that heavy upfront fee and mathematically amortizes it, spreading the pain evenly across the life of your loan. This month-by-month distribution is the mechanism that steadily drives the actual cost of your borrowing upward. Isolating these specific fees and forcing them into the calculation separates a vulnerable borrower from one equipped with hard financial data. With all 4 variables entered, you click Calculate, and the tool instantly generates your final dataset. Right at the top, you see the discrepancy. Your 5.0% stated rate sits next with 6.2% true APR. The math confirms it. Factoring in that $750 fee forced the attractive 5% promise up to a much higher 6.2% reality. Directly below that rate, the tool generates 2 concrete figures: your exact monthly payment and the total interest you will pay over the full duration of the loan. These figures take the abstract concept of a percentage point and translate it into an undeniable cash value that will eventually leave your checking account. Because it relies on those hard cash numbers, the true APR is the only legitimate metric you can use to evaluate if a loan fits your budget. Now, let's scroll down to the visual output section. Here, you'll find an interactive cost breakdown chart, followed by an amortization schedule. The pie chart displays the exact ratio of where your money is going, dividing your total cost into 3 distinct slices: principal, interest, and fees. As you hover your cursor over each slice, it dynamically reveals the precise dollar amounts behind those percentages. Below that chart is the amortization grid. If you look closely at the earliest months, you can see how your initial payments are heavily weighted toward paying off interest rather than reducing your actual principal balance. By tracking your remaining balance as it steadily drops to 0 by month 60, you gain complete transparency over your financial timeline. In a matter of seconds, you've gone from looking at a deceptive advertised rate to holding a complete mathematical breakdown of your debt. Possessing this exact data gives you leverage. You can place competing loan offers side by side, compare their numbers, and declare a definitive mathematical winner. For more step-by-step financial calculators and tool breakdowns, be sure to explore the rest of the MiniWebTool channel. True financial transparency is rarely handed over by a lender. It has to be actively calculated and verified by you.